One distinctive feature of 2008 was the almost unprecedented decline in global equity markets, and so in an effort to insulate investors from the lows of equity investing, a new type of fund was born, and entitled Elements.
A lot of people, I suppose, became a bit disillusioned with what equities can do, what they did in fact do in 2008, and it was a bit of a surprise that how risky risk actually is. And that's what spawned the idea for Elements. Elements is a collection of different asset types, some traditional, some new, and they're put together in a way that will dampen down the extreme moves in markets. So in the same way that you want the extreme upside, but you'll avoid the extreme downside. So that you can obviously guess what that means is we've a lot more stable assets in there, a lot more things like cash and bonds, which provide a degree of stability. Now we still have equities in there because equities are an important component of any portfolio, assuming someone is happy to take that risk. But we do need those as a little kicker, but they're managed in a constrained way.
Similar to a traditional managed fund, but with a lower risk profile, Elements' objective is to provide a smoother, less volatile investment experience.
We will run our exposure to equities and Elements in the same way that we'd run it in any regular fund. We pick the best stocks. But the absolute size of that exposure, we have an arrangement where when the market gets volatile, we reduce that exposure. So you have maybe instead of having 30% exposure to equities, it might go down to 20% or even 15 or even 10. So you get less of the downside as things become uncomfortable.
A critical determinant of the investment mix is value, and Elements' aim is to attempt to identify value in the market and to take a measured approach in its execution.
Valuation is very important. For example, if we consider equities to be very good value, we will increase our allocation to equities. And we could have a point in time, it's conceivable, for example, that we might think that even though equities aren't very volatile, they may be fully valued or more than fully valued. So that plays a big role, the valuation. That is what we do at BIAM. We invest for value. We invest with that margin of safety. Wrapped around that in Elements then is a risk constraint. But obviously we do that within where we can discern value. We follow that.
As markets may have returned to a more stable trend, Elements may attract the attention of investors that seek potential upside for their money via a supervised, controlled, complementary method of saving.
But an important point of Elements is you manage that risk, that you don't allow risk to run, you constrain risk. If you consider Elements as a lower risk version of a traditional managed fund is one way of looking at it. A managed fund still has its virtues, of course. It provides you with a significant exposure to equity markets. It provides you with all the upside that's entailed with that. But as we said, the downside as well. Elements restricts you. So Elements gives you some of that upside, but if things get a bit nervy and a bit volatile, it'll restrict your exposure.